Well, I think the first thing to say is that private markets haven't gone away and aren't going away anytime soon. There has been some caution over the last 12 months, but there is a commitment, an ever-increasing commitment on the part of limited partners to increase their allocations to private markets. We've seen a flight to quality in terms of capital raising, but there is ambition now in terms of capital deployment in a way that we have not been seeing for 18 months or so. A diversification of asset classes, a real focus on a wider range of investable asset classes. There are some questions that still remain. Private credit has grown enormously, and there seems to be unlimited appetite for investment into a broader scale and range of investable assets in private credit. There is that question about the quality of some of those credits. There is a question around, will that bubble burst in some respects? And is there going to be a restructuring in that environment? That remains to be seen. But for now, it looks as though capital is continuing to flow into the private market space. And the democratization of private markets, so the influx of private wealth, the influx of retail and retirement assets, is definitely going to be a continuing factor as we move through 2026 and beyond, and will have an impact on how general partners and sponsors look to diversify their investment focus to ensure that they are meeting the needs of this new investor class. Yeah, in the real asset space, we're going to see continued capital deployment, and that will follow the geopolitical narrative. It will follow where debt and other markets are focused. So we're going to see increased focus for private markets on digital infrastructure, data centers, of course, all of the infrastructure which is supporting the AI boom. We're going to see a continued focus on healthcare and life sciences, and also now an increased focus for private markets in the real asset space in terms of infrastructure supporting defence spending and a focus on national security. So I think there are a number of factors which will continue to influence financial services M&A. The private markets component is important. We're seeing a lot more private equity coming into the insurance environment, into asset management, looking to diversify their portfolios to ensure that they have a range of different income streams to meet the different demands of their investor base. Financial services, strategic M&A, I mean, fundamentally this is a scale business. That's not going away. The importance of new technology, the advent of AI and the implications in terms of robo-investment and all of these different components, tokenization is going to have a big impact on FS M&A as banks, insurers, asset managers look to increase their exposure to these opportunities. And to do that, they need scale. They need assets under management. They need a bigger balance sheet. And the fastest way to achieve that is through M&A. The scale point is an interesting one because it's not just about, and may not even be about building scale for scale's sake. It's about finding the right expertise. You can build a tech stack with the support of outsourced services, with the support of big tech, and a lot of institutions are going that route because, you know, investing in your own R&D is incredibly expensive. So really being very focused about the talent that you need and the people that you need to drive your business forward. And although technology will have a huge impact on financial services, and although there is a new generation coming through who like to consume financial services in a different way, this is a people business. And so investment in talent, investment in relationship management to cut through the complexity will become ever more important. So a few thoughts on the technology environment within financial services currently. As you said, artificial intelligence is dominant in terms of impacting operations, impacting increasingly the client journey. And I think that there is a huge opportunity and a huge benefit to AI in that respect, not least in terms of financial inclusion and increasing the access to financial services for the unbanked and the underinvested, which in most emerging economies and in advanced economies is a major political issue. So I think there's a fundamental social purpose to AI in financial services which is forgotten. I do think that there are challenges, however, ahead in terms of how that's embedded operationally and in the front office. The regulatory focus will continue. Clearly there is fragmentation, there is difference in approach, for example in the EU and in the United States and in the UK and elsewhere in terms of the extent to which AI should be regulated as a technology. But the one thing that joins all of that together is the focus on and the commitment to good customer outcomes. And I think that's the lens that all of our financial services clients should be looking at this issue through. That the AI technology should be there to create better and good customer outcomes. So 2026 is going to be the year of digital assets and tokenization. This is now mainstream. The journey in the United States is well trailed and well traveled, and other countries will start to follow suit in terms of their approach to digital assets. We expect the UK to adopt a journey which is not dissimilar to the US, a more permissive environment than perhaps other jurisdictions, by way of example. But I think the crypto and the stable coin and the retail side grabs all the headlines, but is really missing the point. I think the really key component to the digital asset journey this year will be the rapid acceleration of tokenization of wholesale markets. We're already seeing that in tokenization of money market funds, of tokenization of bank deposits, and there is a real focus now on looking at wholesale market infrastructure and how tokenization can really transform liquidity, speed, and market access. So with government investigations, it's always been a big issue for our financial services clients. And since the financial crisis, there's been a long history of intervention, fines and penalties impacting financial services firms around the world. We're into a different environment now where governments and regulators are looking to rebalance the risk profile that markets take and market participants take. And so the enforcement agenda we've seen generally dialed down. We expect that to continue through 2026. That's not to say that the issues have gone away, they're just different. So there's more of a focus on what we would call the sharp end of supervision, where regulators are being a little bit more intrusive in terms of their day-to-day interactions with financial services firms to understand some of the conduct of business issues that perhaps historically might have been considered for formal investigation and enforcement. And there are other areas, of course, which are linked to geopolitical and national security concerns, which will remain very much in the crosshairs of government enforcement interest. So areas like anti-money laundering, counter-terrorist financing, issues related to export controls, cybersecurity, all of these issues are at the forefront of government thinking in terms of national and economic security, and financial services firms need to tread very carefully in those areas in the period ahead. And there is another element, of course, which is creating additional jeopardy for firms to navigate, and that is the impact of governments intervening directly in the policy agenda of the regulators, and indeed engaging and intervening into the activities of firms directly. The way in which the executive branch of governments globally are now seeking to intervene to impact and implement policy is changing, and that is creating franchise risk, which our clients are having to look at very carefully indeed. I hope you've enjoyed this latest edition of Navigator. We always warmly welcome your feedback on all of the thought leadership that we provide as a firm. If you've got any questions about anything that we've covered in this edition of Navigator, please don't hesitate to get in touch or speak to your usual Eversheds Sutherland contact. Thank you.